As a beginner trader, it can be challenging and overwhelming for you to know the direction the market is going to take next. I mean, for me, I remember that time when I was just starting out, and boy, oh boy, it was so challenging to actually know the direction the market was going to take next. And I wish I knew these top 3 indicators that I believe every beginner trader should be knowing, especially if they want to get maximum results as beginners. And hey, stick around till the end because I'll be telling you how not to misuse these indicators. And if you happen to get value in this video, remember to like and share it maybe with a trader friend of yours, because this might be able to change their direction when it comes to trading. So let's get into it. So let's understand, why do these indicators matter? When it comes to these indicators, most traders, especially the beginner traders, think these are like magic wands where you're just going to be printing money out of the market. And guess what? This is exactly not how they function. But what they're going to help you is to help you interpret the price action on the chart so that you're able to make informed decisions as you trade. They'll basically help you filter out the noise, identify trends as they are actually beginning, spot potential reversals, and also help you time your entries and exits in the market. So they are very, very important, especially if you're beginning. I'm sure these top 3 recommendations when it comes to trading indicators will definitely change how you trade, for you to basically get maximum results as a beginner trader. Now, the very first one, or first ones that I recommend, are the moving averages. When it comes to these, I recommend the 50 exponential moving average and the 200 EMA. Now, these are very important indicators because they will act as your dynamic support and resistance levels on the chart so that you're able to actually enter your trades without any kind of fear. Especially if you're just starting out, these are going to be perfect for you. So this is how you're going to add them onto the chart. You basically come right here under indicators, and then you will type in EMA cross 50-20. So basically this includes both of these moving averages, and what this is going to help you do once you enter that, so once you add them, this is how they look like on your chart. So basically, when price is above both of these, this basically represents an uptrend. It means the trend is so strong to the upside. And then once price is both below these 2 moving averages, it basically signifies, for example, here we can clearly see this basically signifies that price is now in a downtrend. So you need to really understand this, because this will help you, or basically enable you, time your entries, especially whenever you're entering or exiting your trades. So as you can see right here, whenever we have this cross, basically this signifies us that price is going to move to the downside. And then once price crosses back, it basically signifies that we are entering an uptrend, and you can see it is a very strong uptrend right there. So this is how you're going to be using this particular indicator, and it's very, very important for you, especially if you're just starting out your trading journey. The second indicator that I believe every beginner trader should at least have on the chart is the RSI, or what you would call the relative strength index. Now, this is a very important indicator for you as a beginner trader, simply because it is going to show you every time when a particular asset or instrument has been overbought or oversold in the market. Now, how to use it is very simple. Let me show you. So basically what you do on your chart, you're going to come under indicators and type in RSI, or relative strength index. This is the indicator right here. So once you add it to your chart, this is what you're going to, or this is how you're going to use it. So basically it has 2 very important levels. Every time price actually comes around this 70% level, it basically means price has been overbought. And when it is below this 30% level right here, it basically shows you or indicates to you that price has been oversold. So this is how you're going to use it. So you can clearly see that once price actually got to this level, around this level, this was an oversold kind of level, and then price basically started, changing trend, and it dropped. And then you can see this. So basically, this is how you're going to be using this particular indicator. And for you to use it very well, you're basically going to couple it with maybe the EMAs that I've just shared to basically enable you get very strong signals in the market for you to basically maximize your profits as a trader. And then number 3, which is one of my favorites, and I still use it to date. I'm 5 years plus into my trading journey, but I still use this indicator, is the ATR, or the average true range. This basically shows you the volatility in the market, how much price is moving on average over a given number of periods. So it is a very important indicator. Especially how I like to use it is when I'm determining my stop loss that I'm going to be using on my trades, because I don't want to put very tight stops so that the market just comes and wicks me out and then it goes in my direction. So let me show you exactly how you're going to be using it. So on your chart, you basically come under indicators, and then you will search for ATR, stop loss finder. So this is how I use it. So once you've added it on, so it basically shows you a safe zone that you're going to actually use, especially if I'm to, let's say, enter at this particular level here. If I'm to enter here, I'll put my stop to this level, or at this level, and then maybe put my TP to any level that I want to put it to, because I would like to actually stay in a safe zone so that price just doesn't come, wicks me out, and then it continues in my direction. So I like to use this time and time over again for me to have a very safe area when it comes to my stop losses. Now, when it comes to the tip I told you guys on exactly how not to misuse these indicators, is for you to actually use all these indicators on the higher time frames. I see so many beginner traders make this mistake, of using these indicators maybe on the 1 minute time frame or the 5 minute time frame. These are very short time frames that are obviously going to have a lot of noise. There's so much movement that is going to be on these smaller time frames, and they will not give you a clear picture of the market. So if you're to get the best results in your trading, I highly suggest you actually use the higher time frames. So that's it. No guessing, no overcomplication, just clean and repeatable analysis that you're going to be using every day to actually make money from these markets. But in the comments, let me know what are some of your favorite indicators that you use. Go ahead in the comments and let me know. I'll be very, very anxious to actually get to know some of those indicators that you guys use. And if you're someone that has never passed a prop firm challenge and you want to get funded, I created this video right here that will enable you know exactly how you're going to get funded and change your life. So check it out. It will definitely be able to help you.